Hello ladies and gentlemen, good morning. I'm Joseph Novichkov, Senior Analyst at GDMFX with today's morning outlook. Starting with the US dollar, it strengthened to within 0.1% of 112.20 yen, the highest since July 2007. And of course, analysts forecast that US jobs growth will accelerate while Japan remains in recession. The yen fell for a third day versus the USD as Japanese newspapers, including the Nikkei and Yomiuri, reported Prime Minister Shinzo Abe's Liberal Democratic Party will boost its majority at a December 14 election, giving him a mandate to maintain policies that have weakened the currency. The yen has slumped 3.8% in the past month, the worst performer of 10 developed nation currencies. Moving to US, a Federal Reserve survey showed business across the country are hiring workers in industries from aerospace to finance, adding to evidence of labor market strength ahead of key jobs data tomorrow. The report offers Fed policymakers who meet December 16-17 an evidence about the state of the economy as they consider when to raise interest rates for the first time since 2007. In some regions, employers were having trouble finding qualified engineers and healthcare workers. A sign the labor market is getting tighter as unemployment falls. In Europe, Mario Draghi is testing his policy speed limit after pledging last month to rise inflation in the euro area as fast as possible. The European Central Bank president right now faces a go slow from multiple members of the Governor Council. The euro was near a two-year low set yesterday on speculations European Central Bank policymakers that meet later today will signal additional stimulus. Moving to UK, over there, George Osborne's pledge to continue to tackle the budget deficit means the onus remains on the Bank of England governor and his colleagues to drive economic growth. Tight government purchase strings, along with shackles of a struggling euro area, will spur the Monetary Policy Committee to keep their key interest rate at a record low 0.5% today. The sterling is steady at 1.57 versus the USD before the report. Commodity sector gold fell as gains in US employment boosted the case for rising interest rates and strengthened the USD, curbing demand for the metal just as the European Central Bank meets to consider further stimulus, as we mentioned. Gold is a little challenged this morning since yesterday's open at 12.05. West Texas Intermediate rose for a second day as investors wait an unexpected drop in U.S. crude inventories against the prospect of sustained production from OPEC. Crude inventories in the U.S., world's biggest oil consumer, slid to 379.3 million barrels in the week ended November 28. A report came from EIA. In the calendar today, at 12 GMT, Bank of England's asset purchase facility and interest rate decision. At 12:45 GMT, ECB, also interest rate decision. Important high volatile news today. Ladies and gentlemen, keep an eye on the calendar. Thanks for watching. Bye-bye.